Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. As always, I'm excited for every episode, super excited for this one. We have none other than Madhavi Jain with us today. So, Madhavi, welcome to the show.
Hey, Brian, thank you so much for inviting me. I'm excited about our discussion today. And
Yeah,
we just briefly discussed here, and there's a lot coming up for our audience today. So thank you so much for inviting me.
whole lot of good stuff. And I mean, it was nice to meet you in person. I don't remember if that was the first time we met in person or not, but it's been a couple months. Best ever conference a couple months ago in Salt Lake City. It was great meeting you and seeing the Connected Capital booth. I know we're going to talk a little bit about Connected Capital today.
Absolutely.
But yeah, before we do, let's talk about you. Tell us a little bit about yourself and kind of how you got into the investments that you're in, the multifamily, the everything else. So background first, and then we'll
Absolutely. Wow, it's a loaded question always. Where do you want me to begin, really? But here's, I'm going to say something which I quite often say that we all have uncommonly common story. And, we were just discussing about my background, your background, and we found that we have something in common, and math being the common kind of a point here for us.
yeah.
So I feel that's all what we have common in our story too, because when I say my story is I'm a first generation immigrant, I came 9,000 miles away from my birthplace with two suitcases and few hundred converted dollars with my husband and started from scratch. My goodness, there's so many audience who can relate to that. And that's why I say that you have uncommonly common story. So there is my journey, started coming to this country from scratch. Absolutely had no idea that how financial systems in this country work. It was very focused that, okay, as a part of IT industry, come in, get
Mhm.
a job, and we did get a top 5 consulting job, work hard, both the kids are born here. So raise the two kids, have the home, built home, have the car and, the home, the car, kids. It's an American dream, right? So
Yeah, it's
that's
what
where
everybody thinks they want.
it
Yeah.
is, right? So that's what the story begins. I think a lot of story begin there.
Mhm.
But then for me and for us, 2008 happened. And 2008, when both me and my husband actually very conveniently were working at the same projects. By the way, fun fact,
Mhm.
both of us worked on same project, same company for 13 years.
Really,
Yeah, and that's a long time. And marriage
that
is
is.
strong, so we're still strong together. I think that did work for us because the kids were younger, and we needed that flexibility. So we got that.
Yeah.
But the drawback of it, one Monday morning, both of us got called into office and said that next Friday is going to be the last day of the project. And in the
Oh,
IT industry, when it says last day of the project, that means in 2 weeks, if we don't have another project, the job is lost. So here we are with the white elephant of a house, a firstborn kid going into kindergarten. And we have this, huge liability, and we were on H1. We were not even on green card, right? So
yeah.
that felt like a punch in the gut. And even worse, I was about to give birth to my second child.
Mhm.
So I went on maternity leave. We soon delivered my second child, and my husband went on a paternity leave, saved our jobs that way, got a job, moved from California to Austin, and rebuilt our life. And this was the 2008 impact for us. But so the first time we rebuilt when we came to this country, the second time in 2008.
Mhm.
And then again, second child born here, purchased a house here, we kind of rebuilt. And
Mhm.
in 2015, by the way, I have a chronic health condition. I still do.
Mhm.
And that chronic health condition started around in my second pregnancy. And now in 2015, it
Mhm.
had been like 7, 8 years, and it became practically impossible for me to just get up, get ready, and go to work. And
Mhm.
that's why I had to pull the plug. And to 2015,
Yeah.
and when I really had to like really stopped working, it was like cut the cord, stopped working. And then I kept looking at my children, especially my daughter. She
Yeah.
was in middle school. And
Mhm.
I looked at her and I'm thinking that, oh my God, she's going to be in college soon. And I don't want her college choices based on how much we can afford to pay for her college education.
Yeah.
And that's when I started thinking about alternate strategies, passive income, financial freedom. And think about it, it's in a reverse order because I've already left my job, right?
Mhm.
So that's when I started Rental real estate first, because you and me know, based on IRS code, rental real estate is a passive investment, but you may and also know that it's not passive anymore, right? So I learned, the hard way, had a tenant or two, which really created huge problems.
Mhm.
And then I came across the magic that is syndication and multifamily. And I was mind blown. I was mind blown. So you're trying to tell me that all this while, when I'm trying to create this passive income, this whole syndication model ran in parallel, and I just didn't know about it because
Mhm.
it was running in a private circles and private information. So that made me restless. So I started looking into syndications. And by the way, I also came across something called infinite banking. Many people have heard about it, some know about it, but most of them they haven't implemented it. But infinite banking and the syndicated real estate investments, that became like my arsenal for my wealth management. But as I started using them and I was really excited to use them, it made me restless that the community that I come from, whether it's
Mhm.
a first generation community, whether it's the tech community, medical people, dentists, doctors, they have absolutely no idea because they don't circulate in these private circles. So that's what made me restless. And that's when I started thinking about making it an active and the think outside the stocks, which is basically not just outside the stocks, but
Mhm.
that outside the box mentality to bring in to investors to start thinking about this kind of a twofold approach with infinite banking and the syndicated real estate. So I'm going to give you a pause there, a lot to
Yeah,
unfold
yeah,
there.
a lot of stuff there. And I mean, 2008, I think it hit a lot of people hard. And it's,
Mhm.
looking at both you and your husband, getting the same notice at the same time. That's wow. But, you guys recovered and I mean, did what everybody does. You just, keep on keeping on.
Yeah,
I love how you said that you wanted to start sharing it with people who don't have access to this. You learned about it
yeah,
and saw the benefit, and now it's just like, how can I help other people? How can I, reach out and make this accessible to everybody? Because the honest truth, most people don't know about it. It's not taught. It's not taught in your basic financial class. I took a small investing class, and all I talked about was stocks and bonds. And so,
right.
yeah, I mean, you go to your financial planners, and that's what they sell, stocks and bonds. And yeah.
Absolutely.
So anyway, let's take it from there. You talked about, you found out the real estate syndications. Let's talk a little bit about connected capital, how that formed,
Absolutely.
and
Absolutely.
then talk about how kind of the newer syndicator could benefit from, either being part of connected capital or exactly. Yeah,
Great question,
yeah,
Brian. Thanks for asking that because, I kind of see a theme in what I do and how I do it, right? So even we think outside the stocks with infinite banking, why I educate and help them implement it, even with the syndications, with now I have a fund in the think outside the stocks where I bring this, due diligence done investments into my fund so the investors can find really high quality investments in there, right? So I see a theme, I sense a theme in the way I work is that whenever I see a pain, I want to solve it, but I don't want to just solve it for me. I want to, solve it for massive number of people who
yeah,
are also feeling that pain from that side, right? So let's talk about the pain behind connected capital, right? So as a capital partner, as a fund of fund operator, as a capital raiser, when I wanted to do due diligence on investments, right? So over the period of time, I developed like a 230-point checklist, and it is very systematic. It may sound daunting that 230 point, it's a big number, but it's really systematic, right? Syndication team probably have 25 points, the legal probably have 25 points. So together it brings that big checklist. So now when I created this, it's humanly not possible with the amount of deal flow that I was getting. It was not humanly possible for me to do this kind of a thorough due diligence on all the deals that are coming in because as you know, everybody needs capital. And once they know that, okay, you are, sharing it to your investors, sharing it, with the stride that you have, they want to come and approach you to help with that. But the amount of, number of investments that came to my desk and the amount of due diligence I wanted to do, that was just not marrying. And
yeah,
another problem is that, when you are a new capital raise partner or you are, trying to partner with somebody, the best in class operators may not want to do the business with you unless you reach to a certain point, right?
right.
Unless you bring say a couple of million or more to that investment, they don't want to work with you because that's not a good use of their time too. And then lastly, when we are going in together, and when I'm separately creating a capital raise, it becomes challenging to kind of run the business because everything is a back end. There is nothing in the front end, and it becomes difficult to pay the VAs, do the marketing costs, etc. Right? So when
Right.
I had these pain points, and I met my Bobby, who's my partner. I met my partner, and we talked about this, and he had his own kind of pain points. Together, the biggest pain point that we had is
Mhm.
the due diligence, that we just wanted to stop stepping on the landmines. And again, you cannot stop stepping on it, but at least you can reduce it together, right? So the due diligence was our focus, that how can we do really great due diligence
Mhm.
together. So let's just create a group of, say, handful of fund managers who are having
Mhm.
the same pain point. And that's how the connected capital was formed, that we just wanted to get a group together where these are really savvy, have been
Mhm.
ex-syndicators, have great knowledge, and we can do the due diligence together. We can raise the capital together. Together, now we can, instead of just going to that 500 range, we can go to the $2 million range and just get a little bit better economics. So it becomes easier for us to run our business and, keep doing what we're doing for the investors and for the syndicators. So really, if you look at connected capital, it's kind of a three-legged stool where we help our investors, because this due diligence now, with a group of people, with a group of fund managers. By the way, our vision was that 20, but it just exploded, and we had, humongous number of fund managers join us. So
Mhm.
now the number one impact is on investors. Our investors are always first.
Yep.
We do this due diligence, and we bring very curated investments to us. Each of them put in their fund of fund, and they offer to their own individual investors. So we serve investors by high quality investments. Secondly, the syndicators, now they can come to connected capital. At one point, they actually get not just retail investors, but they actually get the fund managers who
Mhm.
can bring the capital based on their database. So now you can just come at one point. The due diligence is done at a single point. The capital raise is done at a single point. So now
Mhm.
you don't have to go and answer the same questions for 10 different fund managers or track 10 different fund managers where you are in your capital raise journey. And of course, the fund managers is the third part of the third leg of that stool, which
Mhm.
get help by number one, doing this collaborative due diligence. Number two, having the best in class partners to work with them, because now we are working as a group. Then number three, having a bigger, better capital raise. So even if you fall short on your goal, but if somebody else is making that delta up, together, the goal together is always reached. And lastly, just having this better economics so that it becomes easier to run their business. By the
Yeah.
way, each fund manager go with their separate check. We don't create an SPV for connected capital so that they can go to that investment, but we
Mhm.
we have that, whatever that economics is, they go directly. So if, as a think outside the stocks, as a fund manager, if I go in that investment and if somebody else does it,
Mhm.
they get exactly the same economics.
Yeah, and I see this from two directions. I mean, at one point, I did start a fund and I decided that wasn't right for me. I think each person kind of has their strengths and weaknesses, and we all, I think everybody recognizes that. But I did raise money for a couple of other deals.
Mhm.
And when you look at like all the due diligence costs that I went through individually, versus how much I made, at the time I was raising, $500,000 to $1 million per raise, but economically it didn't make sense, and so a group like Connected Capital would be perfect for, newer fundraisers that, can't hit the seven-figure marks yet, or the mid seven figures like a lot of people want. But from the opposite perspective now I'm kind of like the lead operator. Now Connected Capital, bringing multiple fundraisers in at the same time, really makes sense as well. So for both directions, I think it's a brilliant move. So,
Thank you. Thank you, Brian. And I'm just going to add to it what you just said, which is very important,
mhm.
that, who is this for? The fund managers we are looking at. So somebody who's able to raise 500 or even say $1 million, but they're just short that 2 million mark. So I'll give you an example, right? When
Yep.
a typical retail investors made in a back end get 70-30 split, and say a 500K fund manager gets 80-20, we
Mhm.
have gone beyond if that 2 million mark, whether it's 85-15 as a promote split.
Yeah.
Sometimes we have even gone to 90-10. And what happens is that they take their checks and they go directly to that. So even if they individually are not making that 2 million mark, they're
Mhm.
still getting that level of promote. And then that's why it's helping the syndicators to, get these bigger check sizes, though it's coming from multiple, fund managers. And now we want people like you who are great at operations to just grow faster. And like if you're able to do say 3 deals in a year with your connections,
Yeah.
now with our connections you can probably do five or even
Yeah.
double the deals, right? So
Bigger deal.
that's,
Yeah. With
yeah, and
combination.
bigger and better. So that's kind of, and of course the investors, don't forget the investors part, because they're getting benefit of that due diligence and highly curated investment. So that's always, me and Bobby always have that three-legged stool in mind, and we
Yeah.
want to help the syndicators grow, the investors and the fund managers.
Yeah, from the syndicator standpoint, I mean, the only thing that slows me down right now is how much money I can bring in. That is my limiting factor, 100%. And so if I just looking at Connected Capital, a group like Connected Capital, even if there's 5 or 6 people, chipping away at a $2 million commitment, I'm happy to move the needle as far as returns because I can do bigger deals, I can do more deals, and bigger
Exactly.
deals and more deals for the syndicator mean, more money long term for me. I mean, I'm giving up a larger piece of a much larger pie, essentially. And then
Right.
I think the three-legged stool works well. Investors, are going to get better splits, and then your capital raisers, I can see all three directions right here really easy. And then, like you said, the capital raisers, they're able to give their investors better splits and get access to more deals. Yeah, I like
Absolutely.
it. I like it.
Love that. Love that. They always say, right, the 100% of a grape, a smaller portion of an watermelon.
Yeah.
It's about you, what you want to choose. So exactly how you put it. I think I love that. And not just, the deal that is coming in, Connected Capital, me and Bobby, our intention is that deeper relationship. So people like you who are so genuinely and honestly, working to get something good for your investors and working
Mhm.
really hard, we want to build deeper relationships. So it's not just about whatever deals are coming to our table, but we probably want to do the due diligence on the operators first, and that's always the first priority. And once we do the due diligence on the operator and your thesis and your underwriting method, now we know much more about how you approach this business. So the second due diligence and the third due diligence based on the property and investment is going to be much smaller and much faster. And now actually we are building that deeper connection with you, getting to know you and getting to know how you work, and what fun we can have together, because growing together is not just about the money portion of it, but who do you want to be successful with, who can you share this success with. So that's why people like you, we're really proud to bring in that can we build this deeper connection. And we have that intention to just not grow for this deal, but how can we know 2 years, 5 years, 10 years later, still grow together and have this success together?
And something that I look at a lot is just the relationships. You want to
Absolutely.
have good relationships with people. And, looking at this just from a business perspective, I mean, when you come in with a new operator, you said you're doing due diligence on the operator and you're doing due diligence on the deal. But if you're doing multiple deals with the same operator over several years, guess what? You don't have to redo that due
Yep.
diligence on the operator.
Yep.
And now you have track record with that operator too. So for lots of reasons, it makes sense to keep these relationships warm
Yep.
and keep working with each other, assuming things go well and you like each other, right? Of course.
Yep. Of course.
I mean, the reality is, every once in a while you do a deal with somebody and you're like, I'm never going to do a deal with them again.
Exactly.
But yeah, assuming everything works well, it's
And I'll tell you a beauty of connected capital as well, Brian. Exactly the point that you made, because, you had to crawl, walk, and run, right? So with connected capital, when, the operators come and present to us, we do something called, closed door meeting. And
Mhm.
in closed door meeting, now the fund managers, capital partners, or whoever in the meeting, they're now actually talking about the good, the bad, the ugly, about the operator and the probably the investment or the market or anything, right? So that's when it's really important. And they have heard about this operator, the good things that will is going to decide that yes, we want to do, very much interested, or something that
Mhm.
hey, he lost money and this is how they reacted, they were like MIA for a long time. So we hear about those things as a grapevine too, because connected
Mhm.
capital is not just about doing due diligence together, but this is like a grapevine where we kind of have this information flooding in from different directions because of this connection. So that's why the connected capital is also important.
Yeah, and let's talk about how people can be a part of Connected Capital and what that looks like.
Definitely. So Connected Capital, we have every Friday we meet. Every Friday there is, every Friday or every other Friday there is a presenter, an operator comes and presents their deal. Now, for operators to join Connected Capital, so they can always go on the website connectedcapital.fund, and on the right hand side there is a button called Submit a Deal. So
Hmm.
they can submit a deal, and that deal actually goes through our investment committee first. We see if this is a right fit for the community, and also if it is a right fit for the operators to come and present, because the time is the top commodity for everybody. People have so many masterminds to go to. They have so many places to attend these webinars and meetings. So we want the sponsors' time to be respected, as well as the community times respected as well. So if it is a right fit and our investment committee thinks that, okay, this is a good fit, then we are gonna, come back and say that, hey, if you want to present to our community, this is, how the presentation looks like. They come and then present. And now the fund managers on the Friday, by the way, anybody is, open for anybody to come in as free. That's a free membership. So on Connected Capital Friday, you can come in, you can listen to it. The advantage operators get, the sponsors get, this is not just you inviting somebody for drinks or appetizers. This
Yeah.
actually is focused time. So almost 1 hour, you spend time in your whatever 30, 40 minutes presentation, the
Yeah.
detailed Q&A from this expert. And now the fund managers who are interested in raising capital can be a part of these discussions. And there is a lot of expertise in the community too. So you learn a lot from this cross questioning. Now,
Hmm.
if you want to do more, and if you are the action taker and you really want to join where the rubber meets the road, then there is a gold level, which is a membership which is at $5,000 annually at this point.
Hmm.
And what we do as Connected Capital, that we include the background checks. So whoever we are raising, we're going to run the background checks, which individually the cost itself will be higher for them. And we also have a third party underwriter on retainer. So we run whenever possible, because there's different asset class that come in. So multifamily apartment, for example, is simpler. Self-storage is simpler. So we run this through third party underwriters. They re-underwrite, they give their kind of perspective on what this investment looks like. And then we go into the deep due diligence as a community collaboratively together. So if you want that access to the background checks, underwriting, and be a part of that collaborative due diligence and want to race together with that, the higher class, now
Hmm.
that's where I call rubber meets the road. Then you
Yeah.
can be the part of the insiders. But it's free to join connectedcapital.fund. You can join as a partner. You can also join as an investor and kind of get a feel of what we are doing. If you're ultra high net worth individual and want to like put in like a bigger check, say 100K, 200K per investment, you can also join as an investor.
Yeah. Now, with Connected Capital, I know, this is an apartment investing podcast, but is it all multifamily? What type of deals, when we talk about sponsors coming in, is there a limit to the types of deals that you guys bring in or to the variety or what? Tell us a little bit about that.
Great question. So one of the top priority for us is diversification. So we want to diversify for our fund managers because our fund managers wants that diversification for their investors. One thing I would say, Brian, is that when we started with the syndication world and started educating our investors on multifamily, now
Hmm.
they have actually learned about syndication, not just the multifamily, but syndication. And they're now curious after investing into multifamily, they're curious about going into self-storage. They're going curious about going in mobile home parks. So
Hmm.
if we don't provide it to them, they're going to find ways to do it with others.
Hmm.
Not only we are providing them, but we are doing the due diligence and we're providing them curated investments. So
Hmm.
that's why we are kind of diversified. We want to work with best in class operators who are sincere about that particular asset class and they have expertise in that particular asset class. So it's
Mhm.
really, real estate, it's diversified. We have RV parks, we have ground up developments that
Yep.
are coming present, multifamily, self storage, mobile home parks. We have actually started getting businesses also pitching in, and we actually have raised capital on a business. We did some due diligence on them as well, as collaboratively as possible. But that's the beauty, that it's about investments, it's about what kind of appetite as a fund manager you have, and what kind
Yep.
of appetite your investor has. And though it's a group, you still have your individual identity. So whether
Mhm.
you want to go in that particular asset class or that particular deal or not, that's completely up to you. So it's together yet independent on you deciding what asset classes that you want to do.
Yeah, yeah, absolutely. And I think that's, if you're the type of person, speaking more to the people listening right now, if you're the type of person that, is leaning towards raising money, that's one of the best parts about that skill is you can apply it over and over and over again to different investment types. You can be the type of person that brings multiple investments to your investors, or you can be the type that focuses. There, I think there's a little bit more leeway or a little wider range of options for fund managers than there is for somebody like me who's running the deals. If I try to, pivot from managing apartments to managing anything else, it's going to take a long time and could be disastrous. But yeah, as somebody who's managing a fund and plugging investors into other people's deals, fund managers have a lot more leeway, and having other people with the experience to vet operators and vet different deals really, really helps as well. So
Absolutely.
yeah.
And Brian, I'm going to add to it a little bit. And think outside the stocks is just not my company name. Think
Mhm.
outside the stocks is a think outside the box, because that has been my mentality for life. And people around me, my husband, my kids, my family, they talk about, oh my God, you think about 10 steps ahead. So here's my 10 step ahead perspective for you. In today's world, syndicators, especially multifamily syndicators and operators, there is the span between the deals is increasing, right? When you do a deal and find another deal, that could be 3 months, 6 months. It used to be much faster. So in between the deals, you still have the investors who have investor ready money. So if you don't provide a parking lot for that money, it's going to run away and get involved into some other investments other than you. So for that, me with Connected Capital, I'm offering like a infinite banking partner program, which is again the infinite banking strategy we haven't talked about. But between the deals, you can actually help investors to park their money in a guaranteed growth strategy, which is growing tax free and which can create not only kind of a compounding effect for them in now, but
Mhm.
also compounding effect when what they're going to pass income tax free to the next generation. So that's one path. The second path, as a syndicator, if somebody like you who's very, very intelligent and expert in multifamily. And like I said, that you give your investor the test of syndications and they're gonna run and find, self-storage or mobile home park.
Mhm.
You could actually be a member in Connected Capital and have access to other best-in-class operators in that other asset class. Look at what due diligence is happening and see if you want to participate. So
Yeah.
those are the two ways you can actually help your investors to diversify and also park their money while they're in between the investments. And the beauty of infinite banking, by the way, is
Mhm.
not only it provides them a parking lot, but this is a win-win situation for people like you as well, because now you're going to create a passive cash flow by partnering with me. Of course, some licensing requirements are required there, but
Yeah.
you're going to create a passive path for yourself from that program. And also, when you have your next deal ready, this is an and asset, so they can actually let it grow there. But when you have the deal, this capital is now ready to be invested in that deal. So you kind of get like a twofold benefit from that while
Mhm.
helping your investors to find that, kind of a secure parking spot.
Yeah, absolutely, absolutely. Well, yeah, I think everybody should be looking into that. It's kind of like the next level, different asset class. A lot of people don't look at that as an investment, but
Yeah.
being able to kind of leverage that to use in other investments. I know a lot of people that do stuff like that, and I know a lot of people that do it, that really, really, like the idea. I haven't jumped in quite yet, but it's something that I'm definitely considering.
I offer you and I invite you actually just to learn about it because infinite banking is one of my biggest passion.
Mhm.
People learn about real estate, they're ready to, jump into that. When I heard, quite honestly, about infinite banking, I got curious and I delved into it. And when I heard that, oh, it's tied to a life insurance, I was so super skeptical.
Mhm.
And you, as you talked about me being trusting my numbers and spreadsheets and being the math kind of the whiz, I went back to my numbers and I created my scenarios, and I it was mind blowing that it actually did work. And that's why whatever I created scenarios for myself, quite honestly, that's what I use to educate others. And it's out of the box strategy. Again, it's a mindset changing strategy. It's not necessarily in investing, but it's about making your savings more efficient and compounding growth and saving taxes on it. And that can build kind of like a foundational structure, which the money does not go away. It's not tied to a risk. It has guaranteed growth portion in it. So it's conservative. It replaces like your bonds and like CDs, stuff like that.
Yeah.
But I do invite you to just find that out first, learn about it. And everybody on this call, just learn about it. And then if you decide this is not a strategy for you, then that's a different story. But I think we are missing out on what the wealthy of America, like Rockefellers and Walt Disney, have been utilizing in their structure, and we are just oblivious to it.
Yeah, absolutely. Well, let's do this. I've got a couple questions to wrap things up. Question number one, if you had to give advice to somebody who was just starting out in the syndication world, what advice would that be?
Well, I would say success leaves clues, as Tony Robbins says, that don't start doing. Sometimes we get into that analysis paralysis that I want to do everything myself. Find someone that you can resonate with, you can trust with. I mean, Brian, you have so much of education that you provide to, right? So find somebody that you resonate with, first of all, with based on your value system, based on what you want to do, and learn from them. They have painstakingly gotten to that point with their set of successes and failures, and I have gotten to this point, my set of success and failures. So you don't have to repeat that. Just connect with someone who has been doing it. But this world is filled with this gurus about the connect, the multifamily or syndication or anything else. So find that right person and then find the community where you are not a lone soldier, right? Because that is going to exponentially increase the path, the growth that you're going to have. So
Mhm.
a mentor and a community, I think this is where I wish I had started with a right mentor and a right community. I learned the hard way, but I think that's most important, that start with that. Don't just try to reinvent the wheel. The wheel is already functioning and it's operating with efficiency.
Yeah, I love it. Don't reinvent the wheel, find somebody that you can learn from and accelerate. So next question is what's
Mhm.
next for you?
Wow, that's great. And, this is my kind of a chance to talk about my mission because, my mission, ever since I started Think Outside the Stocks Connected Capital, is about how I can make this impact like one to many ways, right? So for me, I'm on a mission to change financial trajectory of one family at a time and thousands and if possible millions more to go. And what change I'm talking about, Brian, here is that 2-degree change in your flight path, right? So if you start that 2-degree change now, and
Yeah.
if you're probably going to Seattle, destined to Seattle, now you ended up being in Europe, that's the financial trajectory. I want to change, I want to help change. And for me, how I can do one to many is, of course, I have my podcast, I have my education series, I have connected capital now that the same pain point solving that is brought to the connected capital. We are doing it together as fund managers. The next is that infinite banking partner program where capital raise partners and syndicators can come and join this mission and they get benefit. They have their three-legged stool to help their investors themselves, my growth as well. So it's kind of growing together. So for me, it's always how I can, out of the box, create a strategy which can really create this ripple impact and keep on impacting to many, many people. So it's like not just a domino effect, but it's starting the multi-layer of the domino effect. So that's what I'm up to. And that's why my focus is that how can I help? doing what I do to many people, whether it's connected capital, whether with infinite banking, and how can I make this difference in ultimately individual investors' life with the help of the capital partners and syndicators, and at the same time adding value and solving their problems too. Because quite honestly, cash flow has been number one problem with syndicators and capital raise partners this year.
Yeah. Yeah, and I mean, I'm in several. We've got a lot of them that are still going to be good deals, but the cash flow is kind of,
Yeah, yeah.
gone down quite a bit. But yeah. So anyway, last question. How can listeners learn more about you and then your connected capital, think outside the stocks?
Absolutely. So Think Outside the Stocks. I'm also a podcast host. So Think Outside the Stocks is in podcast on all different podcast channels. So go listen to that. But if you go to thinkoutsideTheStocks.com, you'll find several kind of tools there. There's several tools about infinite banking, about syndication. You get a lot about syndication already from Brian. So think about that outside the box strategy. If you haven't heard about infinite banking, learn about that and just jump on a call with me and see how we can, if it isn't even a right fit for you, and how we can implement that. So that's about infinite banking with connected capital. It's connectedcapital.fund. And if you are a sponsor and you want to help to get that multiple fund managers coming to you and investing in your investments as an LP, pick check LP writers, you can go to connectedcapital.fund and submit your deal. And if you want to really, raise capital on these diversified asset classes with best-in-class operators, with best-in-class asset, diversified asset classes in real estate and slowly into non-real estate as well, but do really good due diligence together.
Yeah.
And, we cannot avoid stepping on the landmines, but if we can at least reduce it, and at the same time have the bigger and better raise as community and have better economics, so it becomes a little easier for you to sustain that. So join connectedcapital.fund, check out what we are doing on Fridays, and that's a starting point. That's available for you for free, so there is nothing to lose there. And see how, if you want to gradually be the part of the insiders, the gold insiders, to participate in what we do together.
And talking about the diversification, the other asset classes that she mentioned, once you start making a lot of money in real estate, like, is definitely possible. You'll want to start diversifying. So connected capital is also a good place to start there too. So awesome.
Absolutely.
Well, Madhavi, thanks very much for coming on the show. Very much.
Absolutely.